Hi everyone, I thought it would be good for me to revisit a company that I haven't looked at in a while. I have invested in Skyworks, but I haven't reassessed my position in the company. So I thought it would be a good idea to give you an update on Skyworks and my thoughts. If you haven't heard of Skyworks before, I suggest taking a look. Skyworks as an investment is a play into 5G technology and the Internet of Things trend that will be part of our lives in the near future. They make a lot of components that go inside phones, but their real growth engine is the Internet of Things, so think smart everything. And if you're new here to my channel, well, welcome, and don't forget to subscribe so you can keep up to date with my videos. I'm trying to help as many people as possible understand what they're actually investing in. See, most people spend more time researching their next refrigerator or the next computer than they do their next investment. Now, I've built a reasonable sized investment portfolio that I'm aiming to continue growing at about 20% per year. And I base a lot of my knowledge on the great investors. We're talking Peter Lynch, Warren Buffett, Charlie Munger, Monish Pabrai, and a handful of others. Okay, now let's jump into the reassessment of Skyworks. Skyworks I like to describe as a picks and shovels type business. And what I mean is that about 150 years ago, in the gold rush era, millions of people were trying to find gold to get rich. But the people who got the richest were the businesses selling the picks and shovels to these people. And in my opinion, Skyworks is a little like this. They make radio frequency chips, which is critical for 5G connectivity. These go into most smartphones of the tech manufacturers like Apple, Huawei, Google, Amazon, and Samsung. They make a broad range of tech stuff, and they have positioned themselves perfectly for this Internet of Things movement. Connectivity has expanded far beyond smartphones and person-to-person communications to now encompass device-to-device networks in the smart home, industrial complexes, automotive markets, and many more. Exciting new platforms are bringing together deep learning, artificial intelligence, and ambient awareness. They also have a large industry to expand into. Across this Internet of Things, it is estimated that 75 billion devices will be intellectually connected globally by 2025. This rapid acceleration will have the transformative effect on the economy, giving rise to new business models and significantly impacting everyday life. So things like driverless cars, smart homes, wearables, medical devices. Skyworks are supplying these new and emerging applications and connecting the Internet of Things ecosystem. Skyworks' product portfolio is protected by a library of about 2,600 worldwide patents and other intellectual property which they own and control. Now this includes a little over 1,000 US patents and about 1,000 foreign patents. And the company has a further 1,200 applications pending. So all this means is that their patents, well, that's their secret, and that's a competitive advantage that they have. Skyworks also currently enjoys strong pricing power, which is evidenced by the fact that they have achieved an average gross margin in excess of 43% over the last 10 years. Now, this competitive advantage appears to be durable, given that their gross margins have been growing at an annual rate of over 2% for the last 10 years. So, for the company's most recent quarter, its gross margins are at 48%, which dwarfs the industry median of 27%. So, a higher than average and growing gross margin indicates a real competitive advantage in the numbers. Their return on tangible equity is great and right in the top 15% of all the companies in their industry. What is more impressive is they have always had a high return on tangible equity. This is a great sign of good management and a compounding business. ROIC, or return on invested capital, is the ability for the business to compound, so turning its profit into more profit. And normally 20% is fantastic here, so 26% is also fantastic. It has slowed a little in recent years. It was in the 30% range about 3 to 5 years ago. Look, I think this is cyclical and I'm not worried at all, but something I am going to keep an eye on. Skyworks has no debt. This means they are stable and won't get into any issues. Debt is the #1 reason companies get into trouble. So no worries here for Skyworks. Skyworks is a well-run company and good stewards of shareholder capital, so that return on tangible equity, return on invested capital, and their debt levels are all indicators of a well-managed business. The CEO, David Aldrich, is paid just $200,000 a year, and the rest of it's in stock. That's really low for a CEO in the tech world. So his net worth is tied really closely to the performance of the share price, and that's exactly what we want to see. All right, this might be anecdotal, but from viewers here on my YouTube channel and other forums online, Skyworks appears to have really smart people working in the company. The culture and environment for the employees is positive and complaints are very minimal from ex-employees. This, in my opinion, is a good sign, as a company is really only as good as its people and their attitude. Okay, let's go through some of the negatives to this investment. Firstly, they only have 3 guru investors. And none of the value investor gurus that I like to follow, they haven't invested. Now, book value has slowed a little in the past few years. The industry is a little cyclical, and the 2018 period was a little slower as the tech world was starting to build up for 5G. Then 2020 was a strange year for everyone, especially the US-China relations and obviously economic spending. So something to consider that growth has slowed recently. I'll try to factor this into my valuation. And then free cash flow also hasn't been growing for about 5 years now. And this relates back to the book value slowing down. Look, I'm happy with the return on invested capital percentage and the return on intangible equity, but I want to see free cash flow grow. 2018 and 2020 were not strong growth years. Now, although Skyworks have patents, which is a great strength, the competition in their space is fierce. Qualcomm, NXP Semiconductors, they're serious competition and they're really good companies. So although they do have some competitive advantages, it's not a big moat around their business, in my opinion. Okay, right now we're using smartphones, but what about when virtual reality becomes more dominant or some other tech that we can't even think of? Skyworks is definitely going in the right direction to enable these things to happen, but the tech world is just so hard to predict. No industry moves faster than tech. This is a big concern I have as a long-term investor. But this is a big concern I have for all of my tech investments, and it doesn't scare me away too much. So now let's go check if the Skyworks price is okay. Now, price is the most important part to this entire investing stuff. Watch my video on how price can kill your investment for more info on why I think it is so critical. I like to use this intrinsic value calculator that I made to help me. It is one of the better ways to value a business. Now, if you want a copy, it's free and it's in the description below. And it takes into account how much money the company will make and how much it will grow. And here are the inputs that I've used for Skyworks. Firstly, I used a highly optimistic 20% 5-year growth rate, which, look, this won't be easy, but I think this is the top end of my valuation. So I think about that $110, maybe $120 is the highest price I could actually go for. So maybe I'm being too conservative. Look, I just can't get my head around 5 years of higher than 20%. Okay, now what I've done here is I've gone and changed the growth rate to 12% for the next 5 years. 12% I feel a lot more comfortable with, as this is also the average from the analysts from both Yahoo and Zacks. Now, like I said, I might be misjudging the company, and that is why I find growth companies really hard to value. Look, sometimes it feels more like a gamble rather than an educated guess, but at least Skyworks has a good track record and really good financial data for a long period of time, that the future is a fair bit more clearer than, say, I don't know, Zoom. And 12% is pretty conservative, so $80 would be the price I'd feel really comfortable with. Okay, now let's look at the stock price over the past 12 months. Now, I actually originally invested back in like 2017, 2018, and I bought some more in April in 2020 when it reached my buy price. But unfortunately, it has gone way past what I want right now. I'm going to show you another way to value a company, and it's to check out this simple little table that I made. It is a super rough way to get a feel for a good buy price. I call it the growth to price to free cash flow method, and I've created this myself. Price to free cash flow is the relationship between the stock price and how much free cash flow the company is making. I then factor in growth rates to get a target price to free cash flow number. Again, this is a very rough way to value a company, but it is pretty good to get a ballpark figure and to then compare that to my discounted cash flow method. Skyworks, I think, in the best case scenario was a growth rate of 20%. So I would think a good price to buy is when the price to free cash flow is under 20. Currently, it's at 32. Okay, now for my opinion. I really like Skyworks as a company. I think they run a really sound tech business. It might not be a big name like Google, Tesla, or Zoom, but they are a very good company about to take advantage of the new tech world. So the future potential of this investment is really big. I'm holding this long term and just keeping an eye on their financial metrics. I mean, I would like to see growth return to free cash flow and equity, but I am confident that that will come. I really love the high compounding rates that they have been able to keep high for a long period of time. Management has shown they are responsible with no debt and a low salary for the CEO too. But unfortunately, I won't be adding any more Skyworks stock at the moment, but we'll be keeping it on my watch list just in case something dramatic happens to the overall stock market or the microchip industry. And I'm also not going to go too crazy with a big portion of my portfolio in Skyworks, mostly because the competition in tech is fierce and the future of tech is more unpredictable than any other industry. Now, I would love your opinion as well on Skyworks, and let me know what you think in the comments. And I hope you enjoyed my analysis here of a tech company that's been going really well lately. Make sure to subscribe to my channel so you don't miss any of my future videos, and I will see you next time.